Okay, so we're going to have a very interesting conversations around the world of commodities. But as usual, let's start with our market. Look at the market here yesterday with the oil and gas, the big seven. And we had two of them, one in green, the other in red. Okay, we're just going to stick with that page, shall we? Conrad was unchanged at 29.98. Conrad, of course, is making an announcement of his annual shareholders meeting for 2016 financial year. 40 Oil, the integrated energy trader, now crossed a new price level, 60.50, up by 7% and about 0.75%. Look at the volume, 1.396. That's quite a bit of a surge in 40 Oil. And Mobile was unchanged, 260. MRS was 37.30. Oando lost 9.54% on the back of 1.522 million ordinary shares. Let's bring in the charts for these two companies. And we start with Oando in the red for the first trading day of the week. Our folks from Stockman Investing, thank you very much for sending those stock charts in for Russ. And we're going to put it up there very quickly. If you're going to see Oando with a very steep fall, thank you, folks. Just look at the top left corner, and you can see the price around 2010. That was about 7 years ago, when Oando was still a blue chip, if you want to call it that, on the market at the price level that you saw there on that particular. That's about 47 naira 19 kobo. That was how much Oando was selling about 7 years ago. Then you look at the share price down with a red arrow all the way down over the last 7 years. Now at 2017, the current resistance level at 10 naira 50. That was what the analysts here put here for us. In between, you've seen the Oando trade at about 29.46. That stock is now down to 6 naira 83. But let's flip that and look at 40 Oil, which is another major energy trader, and you can see the movements in 40 Oil all the way from 2010 and begin to rise from 2013. 40 Oil moved as high as 400 naira on the market. Then there was a sharp fall there for 40 Oil, and now is looking at whether a recovery is somewhere around the corner. So you've seen that green impressive rally, then picked around that level in 2016, and then begin to follow the candles down to where it is today. 60.50 when the market finished off. Thank you, folks, for bringing that into focus for us from Stockman Investing. So inflation was out yesterday, and as always, we like to put this behind what should be your outlook as far as consumer prices concerned. And that's why Amaka Ajeburu is here, one of the research analysts at Financial Derivatives Company. Good morning.
Good morning.
Inflation figure is very sweet to you, research analysts. Many Nigerians don't seem to follow it because they believe that prices don't really follow inflation. But let's go straight to business.
Yes.
The food index
has
been very, very stubborn.
Yes.
9.28% since January the 1st. Is this the figure that Nigerians really want to see?
Yeah, okay, so I would like to also clarify once again that inflation, a decline in inflation, it is not a decline in prices. It's sort of a situation of it could have been worse, but it isn't. So prices could have been higher, but they're not. So inflation is the persistent increase in the price levels. So a decline in the inflation means that prices are increasing, but at a slower rate.
So if we had all gone out yesterday to say, okay, thank goodness, oh gosh, okay, inflation was down to 16.10% year on year, which was in tune with your forecast.
Yes.
At you analysts at AFDC.
Yes.
It's not something that we should pop up some champagne for, should we?
Not necessarily, but at the same time, it's a good indicator that the macroeconomic health is moving towards, it's getting better. So in this sense, yes, food inflation is the only it's the only indicator in the sub-indexes that increased, but at the same time, we can attribute this to the planting season. So there's shortages due to like I said, the planting season. But you can also you can draw from the future of food prices by looking at the month-on-month decomposition of the food basket. So if you look at that, you see a decline to 1.99% in the month of June from 2.54%. So you can use that trend to kind of see the pace and the trend of food prices in the coming months. So,
what should I focus on? And sometimes when these come out every day, every month,
yes.
We go on Twitter and we'll put it as it says year on year, on month on month.
Yes.
For those of you who are econometrics and what have you, what do you focus on more? The headline inflation year on year, or the headline inflation month on month?
Yeah, so you can't really say which one is better than which, because the two of them are giving you two different stories. So year on year, comparing June 2017 to June 2016, the dynamics and the current price level is a lot better. But then if you're comparing month on month, which in this case, fortunately, also declined as well. So you see that month-on-month inflation also declined. So you're comparing the month of May to the month of June, and you're seeing that the price dynamics are a little bit better. So you can't really put emphasis on the other one. But then if you want to look at an indicator that really explains what is going on, you look at the core sub-index. So the core sub-index is the rate of inflation less seasonality, so less distortions in the pricing level, and it has been declining now for 8 months consecutively. So policymakers can use this as a way to determine how prices are going to fare on in the future if you remove distortions to the price trend. So
let's strip away the distortions
yes.
and go to the brass tacks.
Yes.
And those are some of those graphics you folks put together and you just put out there. In terms of prices, where are we at the moment? Let's stick with the consumer goods.
Yes.
Is this an indication of what to look at for in the new month and the way forward?
Yes, it is. And also, we've also listened in the markets and from our people in the market, and they are of the opinion that, because initially we always used to